Oil prices soaring this month, up about 16%. That's the largest one-month gain in over the year. Our next guest says this is all a supply story. Joining us now is Tom Kloza, OPIS Global Head of Energy Analysis. Thank you so much for joining us, Tom. So let's talk about where these oil prices stand, and pardon the pun, what is fueling this, especially when you consider where they were earlier in the year?
Well, it's not demand, it's really supply. And you have two things that are working against comfortable supply. Number one is the OPEC Plus cartel, principally the Saudis and the Russians cutting crude oil. And we'll probably see demand outstrip supply by about 2 million barrels a day in the summertime. The other thing that's really manifesting itself here in the United States is the intense heat. And in places like Texas, Louisiana, Tennessee, even in some of the Rocky Mountain places, you've got refineries that are coughing and wheezing instead of running at close to 100% rates as they would typically do in July. And, you know, you mentioned crude oil prices up 17%, but inflation has really reared its head in the energy patch with other liquids this month. We're looking at diesel and jet fuel prices up anywhere from 25 to 30%. And that's going to rear itself in the producer price numbers that come out next month.
So, Tom, then where do we go from here when we talk about the fact that we've seen such large increases over the last several weeks? What does it look like headed out to the fall?
I think crude oil is going to stay, somewhere between $80 and $89 a barrel, whether it's Brent or WTI. The cha-cha might be done a little bit by refined products. Now, normally in August, gasoline prices ease a little bit because you start to disperse some ingredients in the gasoline formula that are much cheaper as you get into August. But this August, with the Gulf of Mexico water temperatures in the 90s, you really have to be aware of what could happen, maybe not even with a hurricane landfall, but a hurricane threat. And, I would use kind of a little metric that if you have a Category 3 storm in the Gulf of Mexico, you might cube that number and it might have a 27-cent sort of upwelling in prices should it actually target Texas or Louisiana. Let's hope that doesn't happen. Most of the time, hurricanes destroy demand without destroying supply. But this year is really special in the climate, that's for sure.
Tom, so you say this is a supply-based case for why oil is where it is. But there was a note from Goldman about oil demand reaching a record high in July. What do you make of that?
Well, I think they're accurate. I mean, global oil demand is up. In the United States, it's not necessarily up. As a matter of fact, gasoline demand is probably running about 500,000 barrels a day lower than it was from 2016 through 2019 in the summertime. And, the electric vehicle is starting to have a little bit of an impact on the market, a little bit of disintermediation of liquid fuels. And the other thing that has a big impact since COVID is commuting. I mean, it looks as congested as ever on the weekend. I'm here at the Jersey Shore, and I can tell you it's like gridlock on the weekend. But during the week, I think the commuter traffic is down, and that's never going to go back to where it was. The other thing is, the cars get so much better mileage these days. I think the new cars are probably 33 miles per gallon, and then you have the EVs interspersed with that. So we've seen peak demand in the United States. We haven't seen peak demand in the world, and places like India and even the European Union are creeping up a little bit because so far they haven't seen that recession rear its head.
Tom, going back to what you just said a moment ago when it comes to EVs and EV adoption and how that's playing into the demand story, I guess how material is that impact versus what we maybe would have been expecting at this point, given the fact that adoption isn't as quick as many forecasters had initially anticipated?
It's not as quick as anticipated, and I think it'll be a slow bleed to EVs, but it's having an impact in some markets. California, for example, we were well above $6 last year. In California, I think EVs are probably accounting for as great of a share of new car sales in California than anything. And they've made it clear that they want to get rid of the sale of fossil fuel cars by 2035. So we're going to have to start to use the calculus. For every million EVs, you diminish this much in terms of fossil fuel usage here in the United States. And I would dare say that in China, you're seeing that as well, that the Chinese economy may be very, very close to sort of its maximum gasoline usage, even though there's a lot of people there who are moving into the middle class. And with the move into the middle class comes mobility and the need to travel.
Tom, let's talk quickly about gas prices here domestically. According to AAA, they're at $3.75 a gallon. That is up, obviously, from a month ago, but far cry from a year ago when we had a four handle. What are you expecting through the balance of this summer? Could we expect to see a four handle again, and then through the balance of the year, Tom?
I think you only see a four handle if you have one of those cyclonic formations in the Gulf of Mexico threatening the coasts with a hurricane. Without that, gasoline prices should be very, very close to a peak right now. You can use a lot more ingredients to manufacture gasoline in the middle of August, and then demand drops right after Labor Day. So under most circumstances, I would say we're very, very close to a top. And I would say this much: by November or December, you may be 35 to 55 cents lower than what you see in August.
All right. Looking forward to that relief at the pump because I don't have an EV yet. Tom Kloza, we appreciate you. Thank you.